What is going on, everybody? It is Ben Killer, aka Spy Hates Me. This is my first episode to the In Under 10 Minutes series. I hope you enjoy it. I want to go over candlestick patterns. I think it's important to know what a candlestick is, the anatomy of a candlestick, and then my favorite reversal patterns specifically, or reversal candlesticks majorly, right? So first I want to go over what a candlestick is and what it means, the anatomy of a basic candlestick. So for green, we're going to go over the green candlestick first. The body of the candlestick is a thick part. The wicks, or also referred to as the shadows, are the skinny parts. The body is where the bottom of the body, if it's green, is where price opened that day at 9:30 in the morning Eastern Standard, and the top of the body is where it closed that day, 4 o'clock Eastern Standard Time. The wicks is where the price traveled in between. So green signifies that it closed lower. Green signifies that it closed higher than what it opened at. Very exact opposite for the red. Red opens up here at the top of the body, closed down here, signifying that it closed lower than what it opened at, so it's worth less than what it opened at. Alright, so now you know what a candlestick is. My first and foremost, my favorite candlestick is the hammer. I think a lot of people agree with that as well, when it's applicable, right? So you see the hammer being put in, you see this downtrend, you see these lower lows being put in off the high. So we see lower low, lower low, lower low, lower low. So we see this downtrend that's intact, right? So we see this hammer put in the absolute low, the lowest of the low, right? So we see this low being put in, and buyers are actually able to push that price back up to near or high of day and close it that way, right? So buyers are actually be able to reclaim the high of day and actually be able to push it above, right? So buyers took control and then pushed it back into an uptrend, right? So this is a regular hammer. Inverted hammer would be this hammer flipped upside down. As long as it's on a downtrend, it is still bullish reversal. So this is a bullish reversal. And then the opposite of this would be the shooting star. So same thing, you see these higher lows being put in, higher low, higher low, higher low. So on a significant uptrend, buyers were no longer able to maintain control and be able to push that price any higher. So they tried, sellers really stepped in and pushed that near the low of the day and closed it that way, right? So sellers were able to take control and then start putting in the lower lows and put a downtrend in. So this is a bearish reversal, right? So those are my two favorites, right? So the shooting star and the hammer, the two most basic reversal candles that you need to know, and the most popular and the most reliable in my opinion, right? So then we can head over to the hanging man, right? So let me get rid of this. The hanging man, which is kind of like a shooting star, it's just upside down. So just like a hammer at the bottom of a downtrend, an inverted hammer is still bullish. A hanging man is the same thing as a shooting star, so it's still bullish. It's still bearish. It's still bearish. It's very bearish. All right, and my next favorite sets of reversals are going to be the tweezers. So we're going to look at this one. So we got tweezer bottoms right here, right? So we got the tweezer bottom. Get rid of this for now. We got the tweezer bottom right here. So we can see this is a weekly time frame. So look right here, we see sellers were actually able to break down. So we see held this trend line, held this trend line. Sellers are actually able to break down to a large red day, right? So we see sellers being able to put in that large red day, a lot of selling pressure. So large red day on the low, right? So put in a low. Buyers the very next week, because this is the weekly time frame, was able to open up, near where it closed at, and able to regain that whole candle, right? So for it to be tweezer bottom, they had to be equivalent in size, right? So they had to be around the same size. They had to open and close around the same range, right? And they did exactly that. So buyers were able to actually take control and be able to push that price and redo everything that the sellers did that prior week. So this would be bullish tweezer bottom reversal, and you can see it put it on an uptrend, right? And that's the bullish. And so go over to the bearish. Sorry, just trying to give everybody vertigo. Same thing with the bearish reversal. So just know that if it's a bullish reversal, it's going to start with a red candle on a tweezer bottom. If it's bearish, it's going to start with a green candle. So you see buyers were actually able to break. Sorry, it's not the prettiest trend line. Buyers are actually able to break out, right? You see they're able to break out and put in that high right there, right? So they're able to put in a new high, a new swing high right here, right? unable to hold that the following week. So they were able to put in that large green candle, open up down here, closed up here, large green bullish candle when it was happening, right? The very next week, sellers were able to take control and redo everything that those buyers did. So the same thing as the tweezer bottom, the tweezer top is a bearish reversal back to the downside. So we see before this tweezer tops, higher low, higher low, higher low, and then tweezer top came in, sellers took control, lower low, lower lower low, put it in a downtrend, right? I think those are my favorite, kind of candlestick patterns. And there's one more that I don't use as much, but I think it's very important. Obviously, there's the bearish engulfing and the bullish engulfing. We're not going to go over those, but those are where the next day's body will encompass the whole previous day's body. So if it's a bullish engulfing, the next day will encompass the whole previous day's body. So the previous day being a red candlestick, the body of that red candlestick will fit inside the body of the green candlestick, and usually it'll be on a continuation run or even a reversal. But one that I want to go over that I think is looked over sometimes, because it can be looked over very easily, is kind of the kicker patterns, and I think they're fairly important. I don't use them as much as I should, but I want to get back into them, right? So, and this is a bullish kicker. We're going to inverse this in our brains, right, for the bearish kicker. So there's always a bearish, an opposite of what we're looking at. So we're looking at the bullish kicker right now. Flip this, do exactly what the opposite of this is, and that would be the bearish version of that, right? So, all right, so this is the bullish kicker right here. So we see this downtrend is intact. So we'll put in these lower lows, lower lows, lower lows, and then put in the low, right? That ultimate low, right? So we put in that low right here. We're gonna zoom in a little bit. All right, so remember, this is where price closed at. This is where price opened at. So if it's a red one, the top of that body is where price opened. The bottom of that body is where price closed. So price closed down here, right? Price was able to open up. So sellers overnight, right? Because this is a daily time frame. Buyers overnight were able to gap this all the way up above where it opened at that previous day. So buyers overnight were able to take it from here and gap it all the way up to open up right here. So it gapped up above where it opened, so pretty large gap up, and buyers were able to maintain that gap from here all the way to here and push that price all day long. Serious buying pressure all day long, right? Very bullish sign. Easy to overlook because you can't see the gap up most of the time, because on the daily time frame, unless you zoom out on the hourly or the 5 or the whatever minutes, you can see the gap up, gap down then. But this gap up can be overlooked because you can see the candlesticks will still line up, but there still is a gap there, right? So buyers were actually able to take control and push that price up overnight to gap up, open up here, and then able to maintain that gap and continue to push that up. All right, and then one more kind of pattern I want to go over. A lot of people like to call them soldiers or crows, depending on if they're bullish or bearish, right? These are just reversal confirmations, and soldiers are usually 3 green candles after a reversal. So it's just green candles that have it's a reversal followed by, or it's a reversal and then 3 green candles. I'm sorry, I had that mixed up in my head. It's a reversal and then at least 3 green candles, and that kind of gives you confirmation that the reversal is intact. So you see this reversal happening right here, and then 1, 2, 3 candles, and this usually followed by a brief area of consolidation, and then it'll continue up. So it's higher lows, higher lows, higher lows. And then if you flip that to the bearish side, I believe they're called crows. I've heard them called multiple things. It doesn't matter. You see a reversal happen, then you see 3 red days preceding that reversal. That's usually confirmation that that reversal is confirmed, right? So it's just reversal confirmation. If you see that reversal continue on for 3 days, that's usually good confirmation that that trend is going to stay intact, right? So then you can start planning out your trade then, whether or not you want to stay bullish or you want to stay bearish. But just know after those 3 days, a lot of times a brief area of consolidation is going to come in, or sometimes the price just keeps going. But those 3 days are the confirmation period. That's pretty much all I have. Like I said, those the hammers, the shooting stars, my absolute favorite. I think there are many other people as well. If this helped you at all, shoot me a like. If this didn't help you, well then don't shoot me a like. I don't care. But I hope it did help some of you. And like I said, I brought it down to the very basics, and I know people overlook a lot of the basics, so I wanted to go over those real quick. If you have any questions, don't be scared to ask them either in the comments or shoot me a DM. I don't mind. I hope you all have a very good week, and I look forward to making more of these in under 10-minute videos. Thanks. See you next time.